Yo, what's going on, everybody? It's Chase. I hope you're all doing well. As always, nothing in this video constitutes financial advice. Please seek the advice of a registered financial advisor. Everything in this video is for entertainment purposes only. Alright, so today will be a bit of a longer video. We are, I believe, I think today's February 8th or 9th. So it's been a little over a week or two since the last video, so we're going to, we'll cover a lot. We'll talk a little bit about the Discord and what's been going on in there. That'll be a one-time thing just for people who are on the fence about it. And yeah, we'll get into everything. So first thing, let's as always, let's start on the high time frame. Let's work our way down. We will talk about the current Bitcoin trade. We'll look at Sol. Maybe we'll take a look at ETH. We'll probably take a look at ES. We'll see what we have time for, right? Maybe Nvidia, maybe Tesla. Things I have on my watch list at the moment. Okay, so looking at the Bitcoin monthly, as we always go over this, but I always get a lot of the same questions, which is why I repeat myself a lot. And to be honest with you, I don't think it's necessarily bad to always reinforce your framework at the start of your analysis. So I have no problem doing this each time, and hopefully you guys find it valuable to walk through the price action with me a bit. So right off the bottom, big pump, bull market begins, right? Consolidation, move up again. And we're not really concerned with this anymore. What we're concerned with begins with this candle. Okay, this was the big move up to our new price range here. And what we would think is that excuse me. What we would think is that if there was to be a pullback into this huge candle, it would be a buy opportunity. So there's a lot of people on CT talking about potential, 80Ks, 70Ks, when whatever people think's going to come. I will show you how I would pick the level here, and we'll develop a bit of a trade idea around it. Okay. So you have your fair value gap here on a big monthly candle. So what I would do is I would find the equilibrium, the 0.5 of the fair value gap. I would take the high of this candle and the low of this candle, which is 90,200. Just going to put that in real quick. And I'm going to show you guys how this all lines up. So 90,000, and we're going to, I told you guys when I take trades, it's typically based off around many confluential levels. I wonder if confluential is a word, but yeah, many levels of confluence. And there's a lot of things between me, my trades and their stops. And if trades already get stopped, that means that the bias is likely changed, etc., etc. So for here, we're looking at a overall, this is a macro trade, pretty much, you would say, if you got a strong pullback to the low 80s. So looking at the monthly, we would say right here, the equilibrium is 81,930. Okay, so let's put that down. 81,930, that is your monthly level. Let's go to a weekly. Now, when we go to a weekly, we have this weekly gap here. Okay, so now let's take the equilibrium of this gap. What's the low of this candle? 89,422.1. Hopefully everyone has their water. Let's get a sip in. All right. And the equilibrium of this would be 85,561. Great. Now we're going to move down to the daily. And we're going to look at the daily. And we have another fair value gap on the daily. We're going to do this one. We take the low of this candle, 85,159.9. 85,159.9. And that puts us at 83,429.9. 83,429.9. 0.9. We have our monthly level. have our daily level. Oh man, I don't want to do this with everyone. And we have our weekly level. So where do we go from here? Which one do we choose? Well, let's take a look next at the whole structure. From the low to the current high. The current high is at 110,000. That puts a 0.5 to 618 retracement right in this box. Okay, so let's mark out a little box here. And just for for the sake of argument, right, let's extend it all the way to the 705. Okay. So now what are we seeing here? We're seeing a weekly level, a daily level, a monthly level, and a 618 retracement, 0.5 to the 705, 0.618 in the middle, all in this same area. All in here. Okay? So, you know where you want to get in now. The question, and what I'm going to tell you too, is that these are the type of trades where you don't take a long here and put a stop here. It just doesn't make sense. Look at the box. Look at the weekly level. Look at the daily level. Look at the monthly level. Any of these levels could be tested. Okay? So what you have to do here is you have to decide, and it's a personal choice, how much, where do you want to get in? What type of risk do you want to have on it? So let's say, I'll use myself for an example. And to be honest with you, I haven't fully thought this out yet for myself, but I'm just going to go off the top of my head. This could slightly change in the future. But what I would think here is that when we do eventually get a pullback, I think the bounce will be, it'll be a good bounce, but I don't necessarily think you just do this, right? So I would say that I'd be doing let's think. Let's say I want to risk, a typical trade for me, I'm typically risking anywhere between 0.5% to 1.5% of my portfolio. That's a typical trade. And when I have a very big macro do or die trade, sometimes you'll hear me talk about anywhere from 2.5 to 5%. So let's just say on something like this, I'm going to go 3.5 or I'm going to go 4%. Let's just say 4% for the sake of ease, okay? But I might split the orders up later. Yep, make sure we're recording. So I would do it something like this. I would start it at the weekly level, slightly front running this wick, just in case we don't sweep the wick, right? Sometimes you will leave a equal low behind. Sometimes you'll leave an equal low behind. You'll have a whole next leg, and then, all right, let me draw it out so you can understand it better. Sometimes you will front run a wick, right? And you'll leave those equal lows behind. It'll give you the whole entire bounce, whatever. And then next time it comes down, when everyone's waiting for the sweep still, that's when it just crashes through and fulfills right back down to the origin, okay? I've seen that before. Not necessarily what I think would happen here, but just so we could be a part of the trade, let's front run the wick a little bit and front run the weekly level a little bit. That's 1%. Okay, let's put our next order below the wick, near the slightly front running the 618, slightly front running the daily level. That's 2%. 3% at the 618. 4% slightly front running the monthly level. Okay? Those would be the orders right there. All right, 1 second. Since we're talking a macro trade here, the target is obviously new all-time highs. Okay? So let's take our risk reward tool. And let's go from where our average entry price would be. Our average entry price, and it seems like the most confluence, by the way, is around 83K. So let's just say it's slightly front ran because all of our orders were slightly front ran, and we're in around 84K. Okay? And let's target a new all-time high. And let's see where a stop would be. this is likely the trade I would take. And, considering this would be 3 or 4%, you have to think, you'd be getting back, if it went to target, you'd be getting back, let's just say 4%, right? Because we originally talked about 4%. You'd be getting back another 4% plus a half. You'd be adding 6% to your portfolio, okay? Now, for everyone, that might not be exactly what people want, but that is my trading style. That's how I've been teaching you guys. If you saw throughout 2024, and as you've seen in 2025, I'm rarely seeing stop outs. And, you do obviously see less stop outs when you're playing with 1 to 2, 2.5 on occasion risk reward trades. I do agree with that. But do not underestimate the mental stability and the lack of stress that comes with utilizing a wider stop. If you're having an issue with a wider stop, you can always put on some more risk. If, like let's say you typically trade and you risk $100. You say, oh, well, I can't do this whole entire big move just to make $100. Okay, well, then maybe you want to up your risk by 3 times the amount or 5 times the amount. Like I said, I typically risk around 1 to 1.5%. If it's a scalp, 0.5%. In this scenario, I would risk probably 3, probably 4%. Okay? So think about it like that. If you're having an issue with playing wider stops, utilize more risk that makes sense for the stops. Because here's what's going to happen. There's going to be a lot of people who might get long and they might panic close immediately. They say, oh, well, there's the bounce. It's over. That's always something that'll happen. There will be some people who it goes through a little bit and they get stopped out. Okay, boom, they're stopped out. Bounces, goes to all-time high. There's a lot of different things that can happen when your plan and your setup doesn't allow for, you got to give it some room. If you want to play tight stops, you can do that on certain trades. It's just, you also want to be pretty uniform with your approach to markets. I spoke to someone in the Discord. They showed me a trade for, I think it was 6R or something. I said, that's fine if you want to, do 6R trades, but you have to sort of stay with 6R trades, because you can't be doing 6R trades and losing 5, 6 trades in a row, and then you take a 1R trade and you only get 1R back. Okay, so be sort of uniform with how you risk and what type of setups you take. And I've come to realize over the years, I've used to focus more on 2 to 4 risk reward trades. I would say about 2 to 3 years ago, I preached a lot about 2 to 4 risk reward. And now I find myself almost always between 1.5 and 2. That seems to really be my sweet spot. It has been around 1.5 to 2 risk reward. Okay. And like I said, do not underestimate, if you want to do this full time, if you want to be a full-time professional trader, etc., do not underestimate the amount of stress that can come with playing very tight stops, how you can get pushed out of a position and then it can go your way. Taking these trades the way I do, in my opinion, it lets you sleep easy. You know that if you're wrong, the market has shifted. It's like it's usually a very good approach, in my opinion, and that's just what I've found over 8 years. And I do remember in my earlier years when I also looked for 5 risk reward trades and whatnot, and I saw one of the old CT whales, and he said, I can't believe everyone's trading these 4 to 6 reward trades. Most of my trades are 1 risk reward. And I thought, that's sort of weird. And obviously, I didn't have the type of funds I had today back then, but it's something that I always remembered. And when I started coming down towards 2 risk reward trades, I started to understand it more. I said, why don't I just risk a bit more, and if I'm truly invalidated, then I'm truly invalidated. But at least I won't get chopped up by the market. At least I won't be constantly stressed. At least I won't flip-flop 100 different times on CT about, I got stopped out on some super tight stop. This market is super bearish. Like, No, it's not. It's just you're not giving your trades room. Okay, excuse me. So this is probably what it looks like if we get a strong pullback. I don't think it's coming just yet. I know I did that drawing on CT that looked a little something like this to chop people up here, push up to here and then down. That is possible. And if we do get that, I will be bidding this. Okay. So at the moment, I will be bidding this, and we'll have to see what comes to fruition. But yeah, I guess that's a good start to the video. And now let's go down to talk about the current trade and whatnot. All right, so current trade looks we entered at 95.6K, I believe. I believe the level came from the 4-hour. Yeah, it was just the 4-hour demand. I think I had refined it down to the 2-hour. Okay, just barely tapped the top of the demand. We haven't even tapped it yet. I wouldn't be surprised if we do this. Whatever, boom, and then that's the move, right? This will likely be TP1, I would say. Let's set this as take profit 1, which is 100,743. Okay, that'll be our TP1, and then TP2 is here. So I would say that's about, let's do 60% of the position here, 60%, and this will be the last 40. Okay, you could even do 65, 35, really whatever you want to do. I do think this is a bit of magnet for price here, but I have seen times before where you just get the first TP, and I mean, there's more to it than that, right? But there is something in my mind that thinks, okay, this could just get into here, and then maybe it pulls back and like sweeps this low, and maybe then it goes. But the point is, you don't want to be a part of a long, painful trade if you can get, if the only difference is here to here, right, and you've caught from here to here, like look at the difference. You've caught 80% of the move. Why do you need to hold out for the last 20%? And with that theory, even, you could do 80-20. It's really up to you. But I think I'll probably go with the 65-35, something along like what I said. All right. So I guess if I had to think about how this would play out, I could see these stops being ran. But honestly, I don't know. Which is why, right? And which is why, when I get, hold on one second. All right. So when I get questions like this, and yes, for Discord people, and for video people, this will be the one time that I go through the Discord. I won't be showing the Discord in every video because obviously that wouldn't be fair to the Discord users. But just for this one video, I am going to go through some of the stuff in the Discord. So people, like I said, people who are on the fence about considering joining it and whatnot can see what's going on. So Stan says, hi Chase, I'm new to the Discord. Thanks for sharing the setup. Now seeing that we hang around 95.6K support multiple times, do you think there's a higher chance that we need to sweep 94K? Okay, I said it is true that the more times the support or resistance is tested, the weaker it becomes. The issue is that this concept is sometimes used to trick market participants into buying or selling into a key level where big players are actually accumulating or distributing. So for example, with the current trade, while we have tested the 96K level multiple times, we have seen absorption of selling into it. Long story short, I wouldn't use multiple tests thought process in this specific case. That thought process should be more reserved for key high time frame levels such as 92K, whereas if we continue to test 92K over and over and over again, it's likely to fail and we go straight to 85K or something along those lines. And as far as whether we sweep 94K or not, don't know and don't care, with all due respect, because the stop allows for it. Read this post in Random Alpha. Okay, this was from the other day when the Bitcoin trade got filled. I said most of today's conversation in the Discord in regards to the BTC trade can be viewed as greed. Because a lot of people were talking about, can we get a better risk reward? Should we wait for 94K, etc., etc. And I said, look, there's endless things that you can attempt to do in order to achieve better risk reward, or there's the simple, sustainable trade that you can do over and over again for years. I personally will not stress myself endlessly to get a 2-hour trade rather than a peaceful 1.5-hour trade And like I said, I get my orders either right below liquidity or right at the top of the demand box, or even front run liquidity sometime if necessary with some of the orders. And there will be times where layering orders make sense, but that's typically when you have a wide price area and you're uncertain about how low or high price will go. And I just showed you guys that in the Bitcoin high time frame potential macro trade, because you want to be positioned, but we don't know exactly where it will go. That's when layering makes sense. Another mistake people make is when price is coming into a level and then all of a sudden they adjust their orders lower. There will be times where adjustments make sense, perhaps extended consolidation above a level or very slow bleeds, but most of the time people simply adjust their level out of fear of greed. It looks weak, I can probably get filled lower. Most of the time your original trade idea will do just fine, especially if you utilize stops like I do, and sometimes your adjustments will cause you to miss your entry. Okay, so the point is, don't try to greed and endlessly stress about getting the perfect bottom fill tick. It's not sustainable for long-term trading. You really want to enter that flow state, not be in constant stress of over-analysis. So to look at this, and let's say I was, antsy and giddy about the trade, and I was like, okay, well, I need to close here because I might get a fill at 94K liquidity. What happens if we just sweep a little bit and we go to target? So we lost most of our profit. We didn't get to be a part of the trade. So I get that a 2-hour trade is probably possible, or maybe even a 2.5-hour trade is possible from here, and our current trade is only 1.5. But what if you don't get it? What if you don't get it? So that's my thought process, is to just keep stacking up these 1.5-hour trades over and over and over again. I take the likely entry, I take the likely exit. Okay, you guys have heard me say that in the past if you follow me. Likely entry, likely exit, and that's how I trade, okay? So to me, it doesn't matter if 94K is going to be swept or not. I've actually said from the very beginning, I was the one who spoke about 94K in the very beginning. In the very first original tweet, I said, it's okay as well if 94K gets swept. I just don't know if it's going to be just demand or if it's going to be demand and liquidity. The great thing is that we can be a part of the trade and we can have two supporting confluent levels, the demand and the liquidity, both stopping, both being in the way of our invalidation. Okay, so our invalidation is down here. We have one line of defense. We have two lines of defense. All right. And that's how I like to set up my trades typically, is having multiple lines of defense. All right. So that was answering Stan in the Discord. Welcome to the Discord. This was just me referencing the post. And I think that's mostly it for Bitcoin. That's the high time frame trade, and that is the current local trade. Like I said, TP1. TP2, we already talked about all that. Let's move on. Moving on to Solana. Okay. Let's get a nice high time frame view. Let's map out the chart as we usually do. Big up move. We put in a high of resistance here. What happens, right? Rejection from resistance, support, 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 support. Now, what did I say? I said that it is true that the more times the support is tested, the weaker it becomes. The issue is that the concept is sometimes used to trick market participants into selling into the key level where big players are accumulating. It's exactly what happened here. They pushed it down, down, down. Big players accumulated this the whole entire time for this move to the all-time high liquidity. Okay? So just to show you guys how that can work in a practical scenario, right? Now, just talking about this chart again and how we've been moving up. Price moves up. Fresh price range, consolidation, moves up again. When it moves up again, this is the consolidation that led to the move up. Okay, monthly level here. Price comes back into it, taps the very top of it, bounces, goes to all-time high. Let's mark out the all-time high liquidity. Now bouncing again. Let's go down to a weekly. Looking at a weekly, I can see a sweep here, third test here, okay, sort of a triple tap scenario here. And to be honest with you, I haven't looked at the Sol chart in a bit, so we're doing this live with each other. Sweep of the all-time high comes down, re-sweep of the all-time high, again one of those scenarios where big players were distributing here, moves down, starts moving down. Once you start getting these downward movements, you can start marking out these clear fair value gaps that have been rejecting price over and over and over again. Okay, fair value gap rejects price, fair value gap rejects price. Okay, now we're seeing potential bounce at demand here. What we would be looking for, in my opinion, is a move back into this fair value gap. That does align with the Bitcoin idea. And when it comes to the trade that I posted in the Discord, the potential ETH trade, if you want to see that in full, you could join if you'd like. When talking about that trade, and people are always saying, oh well, Chase, how could you think that Bitcoin could be going to 102 and Sol could be going down to sweep the lows? They can happen at different times, right? So Bitcoin can come up and it can do its move into 102. It could consolidate up here, and then it could do its move down, right? And that would have Solana come up and do its move into here. Maybe it even goes a little bit higher, right? And that would set the stage for, if Bitcoin was to do a major pullback, for Solana to come back, sweep this low into the monthly demand. Monthly demand is bullish until it's not, okay? So if we were to come back into the monthly demand, it would be a potential bid. Now, keep in mind that if you're bidding the big BTC trade, you may not, it's all about how you want to split your risk up. Okay, I'm not telling you to put 4% on the Bitcoin trade and then go and put 4% on the Sol trade too, right? You're going to take what's comfortable for you on a macro trade, and if that number is 4%, maybe you want to do 3% on Bitcoin, 1% on Sol. Maybe you want to do 2 and 2. That's up to you, okay? For me, I'd probably just focus on the Bitcoin trade because the initial strength typically comes from Bitcoin when you have a big dump. So yeah, we would focus on the Bitcoin trade there. But yes, once again, big monthly block here, potential liquidity here, daily demand here. That could be a potential trade. And like I said, these things can happen. Just because I put in an idea, it doesn't mean that they're conflicting ideas. It just means that you might have to give one some more time than the other. Okay? And that is how I would have Sol marked out at the moment. All right. Looking at ETH. ETH came down, sweeped everything. This type of thing, and I see a lot of people calling for a resweep. It is possible. I'm not going to say it's not possible. But what I would say is that keep in mind that on big moves, when you get big leverage flushes, it doesn't always have to sweep on your spot exchanges, right? So look at this move on Bitcoin, right? You go over to Coinbase, didn't sweep, and it went, okay? So you don't always have to have a resweep on spot. It's really, the leverage flush is based off of perps. Perps is where the leverage flush occurs, okay? So don't be confused and always think, oh, well, this has to sweep because there's equal lows left behind. It's not true. It's more true when you talk about perp charts and leverage and whatnot, but it's not as true when you're talking about spot, okay? Honestly, with ETH, like I said, haven't really been looking at it. Don't really plan to look at it because I think it's an underperformer for the most part. So why be a part of the underperformer when, and let's just clear these charts so we can see what they look like, right? So Bitcoin, potential rounding out here. Sol, rounding out and bouncing. ETH, still pretty much a bleed here. This is rounding out somewhat, but this looks more of like a bleed than these charts do, right? So why, and asset selection matters. This was another thing I talked about in the Discord, and I said, why are you looking to long ETH, whatever people say? Why are you looking to long ETH if Bitcoin performs better and Solana performs better? What's the point? So, I'm gonna stick by my guns there, and we're gonna skip it. Fuck it. So ES has just been on like a serious tear, right? Let's go to let's just go to SPX so we can get the whole chart. I think eventually we're going to get some type of a pullback here, and I also think that's sort of, I don't know if that's going to be when we get the pullback on Bitcoin. Likely, probably will be, probably be around the same time. But you know, just looking at ES, or you know, looking at SPX here, you know, bounces off the monthly, and you're just been pushing. My eyes don't go to anywhere like super specifically here. You know, first point of liquidity here, but I don't even think that's really enough of a pullback. That's 6%. No, I mean, we're looking for like 10, 15%. Let's see if we see anything on a weekly. Okay, so now on the weekly, we're getting something better here. We have a weekly block. What type of pullback would that be? 8%. Okay, you know, that 8% could definitely warrant a bounce, right? Let me just clear this off. My eyes sort of snapped to like here-ish. Deviation. Sort of like deviates both sides, right? And then this is sort of like your demand right here. So let's mark that out. Rated around 5,500 with even a potential low to sweep. Although again, this is the same scenario as Bitcoin, right? I wouldn't say, oh, this needs to sweep. I would just say, okay, there's the demand. So I would start my orders at the demand. Maybe I'd leave a little bit below the liquidity. And let's see what that's looking like now. If this is like 10% or so, I think I'd be content. Yeah. Okay, there we go. So there's about a 10% pullback to about 5,400, 5,500 on SPX. That is when I would see Bitcoin also pulling back around the same time. And I just think we're due for, I don't think we're due for this, right? I don't think we're necessarily due for this, but I think we're due for one of these. And that would just look like, that would look something like that, right? Okay. So that's really just the plan with SPX. I'm not, you know, really looking at any short-term trades on ES, even though, you know, we do that sometimes, but this will be, I'll throw some dry powder at it, right? So if you're sitting on some cash and you want to put some cash into the market, 5,500 is probably your level. It doesn't mean you blow the whole load, right? It just means that you start working your way in with the cash that you have on hand. Maybe 30% of cash on hand or whatever you're comfortable with. It really all depends. I can't necessarily tell you, like, let's say I'm just going to use $1 million, right, and I know $1 million is not realistic for a lot of people, but I just want to use a big number to make it make more sense. If you had $1 million and you were going to bid this would probably be a good place to throw in 150,000, 200,000, right? That's how I would see it. You know, that's about 15% of your portfolio, 20% of your portfolio, and you're likely holding it for the long term. That's probably a decent pullback to get in, considering when you look at SPX pullbacks, 10%, 6%, 10%. Okay, when's the next 10%? Right? That would probably be your pullback to where you'd put some cash in. Okay, that's how I'd see that. I don't think I see anything on the short term on Nvidia. Whoops. It dipped down right into this, you know, sort of monthly inefficiency here. Tagged it. You know, you had your demand here. You got one tap of it. Perfect tap of the top of demand there, right? I wonder if did it hit the block? No, slightly front ran. Okay, that's why you got to slightly front run sometimes. Do I see any obvious liquidity here or anything? Maybe it comes back for that equal low right there. Maybe. Oh, it's already, yeah, pretty strong bounce here. But you know, we could see a rejection off of here, something like that. Maybe we come back, a little bit of something like that goes. But you know, I'll get there when it comes, right? I don't really do a lot of forethought on stock trades. I sort of just wait to see if there's any big red days, and then I start to look. I like to look for a big red day, and that's when I try to find my entries. Tesla real quick. You know, same sort of concept, right? Big fair value gap here. We can mark it out. Don't need to be exact here. Let's just keep it moving. Yep, right around there, around 310.95. That'll have confluence with these levels onto the left. Let's move down to a weekly real quick. Okay, look at that. Low, potential liquidity there. I would say potential liquidity here too, though. Let's look at the whole leg. Let's look at the leg as a whole, see where the 618's at. Leg as a whole puts the 618 around 318. Now we got another level. Now we got 3 levels. Okay, 1%, 2%, 3%. Same concept as I just taught you guys earlier on the Bitcoin trade. Okay. Now I'm not telling you. You know, when it comes to stock stuff, I'm not extremely hip to the fundamentals and what's happening. I'm just, you know me, I'm a chart guy. So I do think that there could be a good trade here, but obviously, you know, I'll take it as it comes. I'm not usually in a big rush to leave a lot of orders ahead of time. I do like the look of this. I do like the look of if this comes down nasty, right? Like that's what I would want. I don't want it to bleed. I don't want this. This I don't want, okay? But if this comes down nasty, something like that, that's likely a buy opportunity. Bounce to, let's say, like 380s, right? You want it to come down nasty into the level. A lot of people get scared when price comes down, you know, viciously into the level, but that's what you want most of the time. It really is what you want. When it comes down all soft and shitty, that's when it pukes through. You don't want that. You want, oh, fuck, and then you get that strong bounce. Okay, that's what you want. All right, so I think that's pretty good. Let's run through the Discord real quick if there's anything I missed. So yeah, I mean the point of the Discord, right? And I'll reiterate sort of the first message that I have here, and I really wanted to make a community for the people on CT who feel like, you know, CT has sort of gone down the drain, and you know, obviously there's a fee attached to it because I'm spending a lot of time in here and talking and whatnot. There's plenty of conversations I've had in here already with people and teaching people things about, you know, different levels and whatnot, and how I would take certain trades, and people going over the videos and whatnot. But at the end of the day, I wanted to make a community for people who are serious about trading. You know, like I said, it's not to be boastful or anything, but the you know, my monthly trading income is more than what I get from the Whop. It's nice to have another form of income. It always is. I mean, I'll take as many forms of income as I can. You know, I'm not sitting here lying to you. But the point is that I wanted to make a place that's good for people, because I've been inside of some other groups and I've seen what things look like, and it just seems like, and especially on CT, it just seems like everything has gone to shit over the past. It's really just like over the past year and a half. Like things seem to have really gone to shit. So that's my goal. I interact in here almost daily. Like I said, I will provide a trade or two exclusively each month that I have high confidence in. When it comes to posting trades on CT, I'll post them on CT as I usually do. I'm more willing to talk about stops, targets, and answer questions inside of the Discord. So if you're someone who's often in my replies asking different things, consider joining. Again, I will still try to reply to people on CT. It's just, you have to understand, you know, put yourself in my position. I've been providing a crazy win rate on CT for over a year now. I teach on CT like every day, replying to even trolls I reply to and try to help them. It just came to a point where it's getting a little ridiculous. I felt like part of my kindness was being taken advantage of, and yeah, I figured I might as well create a place that could help people and also help myself. And I think that's a more fair exchange than what I've currently been doing. Yeah, I mean, like I said, I put so many public trades on CT. I mean, I know I'm not even gonna talk shit, but I know that there's people taking my public trades, putting them in private places. It just wasn't fair to me. So yeah, this is where we're at. And like I said, I will do my best to interact and enrich the ability and the education of everyone within this Discord when I have a chance. Like I said, I think we've had some good conversations in here already, and I think people are learning. And yeah, let's keep it going. So, excuse me. Hopefully today was a good amount of information. I think we covered a lot of things. Like I said, wanted to do a longer video for you guys since it's been a bit. Yeah, and I think that's it. So I hope you all have a great week. I know we have CPI coming up on Wednesday. We'll see how this Bitcoin trade moves. Like I said, I showed you guys the scenarios. I think any of it's okay. But CPI Wednesday, potentially that'll be the catalyst to make the move up, or potentially that'll be the catalyst to sweep the low and then make the move up, or maybe you can do it beforehand. But the point is, it doesn't really matter because we know where our invalidation is, and we know the trade that we're in. And we don't need to be flip-floppy about it, right? If we lose 94K in a significant way, yeah, we can look to find an exit for half an hour loss or whatever we want to look for. I'll have to see. But overall, these type of trades should mostly give you peace of mind that it's either going to go our way, or there was a significant potential shift to the market in which, hey, maybe we'll get those 83K area fills. Okay, thank you very much, everybody. Thank you to those who have joined the Discord. Hopefully you've been enjoying it. And hey, if you're looking for a spot, right? If you're looking for a community where I'm gonna keep it professional, and like I said, I'm not afraid to kick people from the Discord either. We're gonna try to keep it high tier, high level trading. Yeah, so let's get it. I'll talk to you guys soon. Thank you very much. Peace out.